Soon I won't need the hoodie anymore. Do you believe it's 37 degrees? That's like a heat wave here. This is the 0DTE morning market analysis, and it is Tuesday, February 25th. We are finally climbing out of this cold morass that we've been going through. And this morning, our focus is going to be on how Grok 3, helps us with our trading. And really impactful. I'll tell you, ever since Grok 3 came out, I forgot what ChatGPT was, quite frankly, and it is clearly superior. Can't wait to see the follow-on with the product, the voice the voice command that's going to come on the phone very soon, all of that. But I'm sorry, I'm getting into the weeds here. Time to talk about the 0DTE morning market analysis. This is where we look at volatility, market direction, market structure, so we know what trade we're making, what things are going to impact us, and that's really the top of a conversation with Grok, how it has helped me rank those events that are happening through the day and how they might affect our 0DTE trading. And we trade asymmetric, out-of-the-money butterflies, looking to minimize our volatility of returns, our drawdown, and maximize our return on capital. Yesterday was a really good day, very quick, got it over within an hour, made about, $2,300 or something like that. People are asking me all the time, Ernie, why don't you just show your trades? And I said, well, it's not about, this show, the service, it's not really about that. It's about teaching people how to become pro traders. But if you'd like to see performance and all that stuff, let me know. I'd be happy to show it. All right. On to let's see if we can do this in first try. On to the charts. We did it. All right. Very first order of business is looking at the VIX so we can gauge the level of volatility, and that tells us how we should orientate ourselves to that level of risk and that opportunity. And volatility has been rising. We can see it's a little higher than it was yesterday at 19.44. That still brings us into the 35 to 25 wide guide. What are we doing? Are we doing 25, 30, 35? I don't know. So what we do is we then go look at the big ass fly. It's kind of like an expected move indicator for us. It tells us what the market is pricing options at. And depending on that at the money 50 wide fly, it will tell us the debit, and that debit we gauge to see whether or not we should be really open on the open side or the narrow side of our range. And so that's what you see up top here. So let's do that. Let's go to that chart. Sorry. That means we need to. I was just looking for. That means I have to go to TradingView. All right. TradingView, where are you? Not TradingView, to Thinkorswim. I'm having a hard time seeing it on here because it's so small. Hold on. Give me a second here. Got to get orientated. Where is Thinkorswim? There it is. See, the problem is that I am controlling the whole thing via a piece of software that is sitting on a monitor, a teleprompter that's a little bit away from me, and it's not only is it small, but it's mirrored, so it's backwards. Oh man. So that's what happens. Anyways, big ass fly. Big ass fly right this morning. It's an at the money 50 wide butterfly that we put on in the ES so that we can see it in the morning and we can look at Thinkorswim and tells us what the debit is. When the debit is below 25, the big ass fly now becomes a viable strategy to trade as well. Looking for market events that may be coming up. Volatility will tend to rise into that event if there's high expectation. And then when the event happens, typically what happens is that the surprise is no more and volatility crushes. And while we're in that fly, that means that the value of that fly increases very dramatically because premium decay accelerates, and it's most apparent on that 0DTE. That's the whole reason why we do 0DTE, because we're looking for that rapid volatility crush and premium decay, which increases our value of our fly. And so anyways, when we get to a big-ass fly that's under 25 debit, that means that the gamma risk is low enough and the potential profit is high enough that it makes it a viable trade. Now, 20 or 19, that's definitely in our wheelhouse, man. So anyways, now we have to go back to the chart, to the TradingView chart, and see where that puts us on this scale. And so 20, 20, 19, 20 is like right here, and you can see that's on the wide side of the scale. See, we're on Goldilocks 1 right now. That's right here. All right. So we're on 30, 35 wide. All right. So we're like in between here. All right. So we know how wide we're going, 30, 35 wide. Let's see what direction we're going, because we're directional traders, out of the money butterflies. That's our initial direction, by the way. You have to pick a direction. So that means we're bearish. We're well below the moving average. Also, the moving average is moving down, sloping down. So we're going to choose out of the money put flies that are 30, 35 wide. Now let's see where our potential event is going to happen. So yesterday you saw a big drop in the market. I took a trade prior to the market happening, what's called a MOAF, or a mother of all flies. It's another strategy that we're actually under development right now, and it produced a $2,300 profit for me. Told me to put it way out of the money, make it super big, and that's what happened. All right, so the event is likely to happen on a pull up and then resumption in trend. In other words, we're looking for something like this to happen. Up and then, then down like that. So each one of these levels are potential areas where we'll find a tradable event. And so I have marked off the morning session. That's what these vertical lines are, 9:30 to 12:30. And we're waiting for that event to happen in that area. I also have this indicator that I developed. It's called the open score with divergence. And what it does is it looks at a wide range of non-correlated indicators, looking at volatility, price action, momentum, volume, and then scores them. And what it's telling us here is when there's a possible divergence or change. And so we use that in conjunction with the level, and that gives us confirmation that that change is occurring. So if you want to get that, you can go on to TradingView and to indicators and look for open score with divergence. All right. So we'll use that. And that's it. All right. So let's go back to well, what we need to do now is we need to talk about how Grok is helping me in trading. All right, or helping me in virtually everything. And if you're not familiar with using large language models or AI assistants or creating agents or bots or anything like that, we look at this very carefully and make great use of it as traders. It helps us summarize the market conditions and so forth. So I asked Grok to list all of the things that are events that could happen today that could affect us as 0DTE traders, and then rank them in a level of impactfulness. And it gave me, and then tell me how that's going to happen and why. So it gave me 6 different things. And the first was Consumer Confidence Index, which is opening up at 10 a.m. And why? Because it's the biggest macro driver today, first of all. There aren't any really big red reports on Forex Factory, but this is an orange report, so it's mid-level. I have a whole ranking of economic reports, and if you'd like access to that, just let me know. Consumer sentiment sways market direction. How? Weak data could tank the SPX, spiking puts. Strong data lifts calls. Expect a sharp move within 15 to 30 minutes of release if it misses on the expected numbers. The second thing is Home Depot earnings. We're in earnings season. We've already seen that Walmart and what it did to the market last week. Home Depot is another one of those type of market gauges. And it says why? Because the retail giant's results could signal consumer spending health, a key SPX driver. How? A miss or dour guidance pressures SPX down. A beat could spark a morning rally. The third ranked thing that could affect us is SPX technical levels and gamma exposure. Well, we already looked at that, and that's exactly what we do every morning. We look at where volatility is, where gamma is based on the big ass fly, and how we adjust our trades. And then the fourth, it's saying that the Richmond Fed Manufacturing Index, and then geopolitical headlines and market microstructure. With a rather simplistic prompt, I can get a ranking of all of these different events that, well, now I should go back to the big head, right? Yeah, so with a relatively simplistic prompt, Grok can lay out the market day for me, help me be prepared. And the reason why I'm prepared for these type of things, what we're really looking for as 0DTE traders is fluctuations or changes in volatility. Those changes present opportunity, particularly when volatility is high. Actually, it doesn't really matter where it is because volatility is always relative to where it was in the past. So we're looking for changes in volatility. We want to ideally anticipate events and then be positioned to take advantage of after the event has happened. There's often a volatility crush, and then we profit from that in a significant way, by the way. So that's why it's so important. If we understand exactly the nature of these events, the timing of them, what to look for, etc., then we're prepared as traders. And we already have the whole risk to reward thing figured out and the strategy. Now we just need to plug it all together. So that's it. That's what we're doing. And I'll be going into how Grok is helping us in many other different ways. Actually, LLMs. I know that a lot of you are probably using things like ChatGPT or Claude or any of the other things that are out there. But by far, Grok is where it's at. It is by far the most capable AI right now in the market. And from a trader's point of view and from many other aspects, it's an incredible tool, helps us every day. And I'll be going into much detail later on. Thank you very much. Coach Ernie